Hi there, Trading Rockstars, and apologies for the lateness of this broadcast. I have a whole number of excuses. I was actually going to go live yesterday and do it on Facebook Live, but due to a number of restrictions, that wasn't possible. So here I am, still early, nothing to worry about. In fact, I wanted to start off today is by saying that when you have these big market gaps, as you will see when we go through our charts just now, and those of you who were doing your analysis over the weekend and woke up this morning to have a look at what was going on at the beginning of the week will have seen some huge gaps. Well, huge, it's relative speaking, I suppose, but they're pretty large gaps compared to what we very often see. Plenty happening in the market, the usual stuff happening in the States, coronavirus, etc. Not that I really care about that, but there are obviously reasons why these sort of things happen and can happen. But in most cases, this time it actually worked in our favor, as you'll see. But it's important to note as well that you shouldn't jump to any conclusions as a result of that. But likewise, also don't rush into anything. No need for that. Also, last week, I mean, after my last weekly appraisal of the markets, we had quite a lot of reversal activity again for similar reasons. I think that caused the gap of the weekend. So we're currently experiencing pretty choppy markets, even on the higher time frames. And along with that, of course, poor directional momentum in any one particular direction. But that's not all markets. And of course, this is why our selection criteria are so important, because it helps us to stay out of most of the rubbish, and therefore helps us to not have unnecessarily losing trades, and of course to aggressively manage our downside. So those were certainly, just as a high level qualitative comment in terms of the markets last week, was true, but not exclusively. But because of that, I think we certainly had far fewer trades last week than we had the week before. That's par for the course when you have those kind of market conditions. But in any case, I mean, that's just some general commentary. I hope that that's something that also you will put under your hat and remember to use, because as I've said many times, one of the biggest problems I've had with teaching new traders is teaching them how to do nothing. And that certainly was the case last week and even into the early part of this week, and being very uh, prudent and using your discretion to be very careful about what trades you actually take when the markets are behaving as they have been. So without further ado, then let's have a look at what the markets are doing, as always starting with Euro USD, just as a general sort of benchmark. We've, during the course of last week, had a breakout from our channel on the daily time frame. That was in fact on Thursday's close, which set us up for some trading, which we've taken advantage of. In fact, with my little tests and so on, you mustn't pay too much attention to the open trades that you see on my charts right here. But certainly those of you who are trading the 4-hour time frame using daily 13 candle historical Donchian for your channel would have taken an entry probably on the 24th. So, looking at, if you were trading on a Friday, you would have taken either placed a limit order, entered the market at around 4 a.m. on the 24th. And of course, if you've got that trading software that we use, you really should have been into that trade. Your preceding fractal for a stop was too much, given the fact that we've still got a sub 50 ATR on this pair. So you're looking at just over 30 pips for a stop. So that's your original stop, would have been around that region with your entry at the crosshair. And by now you should have been able to trail your stop to break even, because certainly over the last few candles today, you do have 6 closed candles, all below, all with their highest highs below your entry point. So your stop would be at break even right now, and you'd be about halfway to your take profit. So take profit at about the 50 pip mark on this currency pair. Okay, maybe not quite there, but nevertheless, you're well on your way. You're already at break even. You're in a risk-free trade. So you either lose nothing, or you gain. You're going to make about 1.5%, assuming that that's what your original risk is. All right. So I don't want to get bogged down with the euro, however, because that's not really the story of the day. Certainly, just looking at last week, the theme of last week was in fact dominated by what we mentioned pre-trading start last Sunday, which was the Swiss franc. It certainly continued to be the main player in the markets last week. I'd say that was the dominant theme. Before I carry on into this, I know that some of you had questions for me last week. Please, you're welcome to post any questions wherever you see this video. If you're seeing it on our Facebook page, or where it's designed to be, of course, is within our community, then please do just pop in a question, and either myself or one of the team will get back to you on that. So if there's anything that's not clear, of course, I'm not here to sort of go into all the massive detail on how all the strategies work. But if there's anything that you need help on, or any basic questions, put them in there. Also, if you have any other general topics that you would like me to discuss in our videos, then please don't hesitate to pop those into the question section. All right, so starting off with Swiss yen, I think we certainly spoke about that last week. And just going back to where we were last week, we'd just seen an isolated high formed on the daily time frame, and had a very large, let me just bring the weekly chart over. We'd had a very long extended candle on the weekly time frame before the start of last week, which, of course, last week was a single bearish inside bar. And that's represented by these candles coming down here. Now, that's fine, absolutely fine, all the way along, all looking for potential resumptions there. However, when it came to Friday, we saw that Friday's candle just managed to close inside our historical Donchian channel. It would have been certainly both the 13 and the 21. And that was already a sign of weakness. Not that we were particularly interested in or expecting to have a gap, but there was no bullish impulse candle here last week at all. Of course, those of you guys are trading the standard trend continuation strategies, where you simply place in this case, a buy stop order if you're in your retracement or corrective wave, or phase 2 wave, as some of us call it, then you're going to basically see a couple of false starts over here, and I'd say that you will have probably had a losing trade around there. But if you're trading the multi-time frame entries, then again, definitely conditions were fine using last week's impulse candle on weekly and trending in an impulse wave. But then our selection criteria on daily required us to find an impulse candle, and there was nothing. So no entries there for us using that strategy. And of course, a big change from that very strong bullish momentum on this currency pair. We'll look at the overall scoring for the different currencies in a second, but I'd say, given that last week we had a pretty high score for Swiss yen in a bullish direction, very little happened. But we stayed out of the market without any bullish impulsive behavior in any case. So that was an important one to be able to avoid. And if you were using the continuation entry, then that's just the name of the game for that strategy. All right, so that's the Swiss yen. Aussie Swiss is another one I'd like to just have a quick look at. And regardless of what's going on today, not that important, but certainly, again, just looking at the daily down to the 4-hour time frame. On the daily time frame, we've been outside of both the 13 and 21 HTC channels for quite some time. We did have a bit of weakness showing here, but it's certainly come back outside of that channel. And anyone trading, even the trend continuation strategies outside of it, you would have had no problem getting an entry. And by certainly today, with a strong bearish candle, you should well have had your take profit hit. But for our daily entry with the multi-time frame entry, looking at weekly first, on weekly we're still deep inside the channel. So there's nothing happening for us on that strategy, the only thing that we could possibly look at, of course, is once we were outside of the preceding channel, certainly the daily 13 HTC, we'd be able to look for short entries. Now, this would have been something that we would have looked at over the last couple of weeks, because these daily candles, this has been going on for a while, certainly from the beginning of the week before last. But coming back to last week again, there were plenty of opportunities. You should have taken the first one though, and if you get stopped out, just go again. And just looking at where that is, last week started with the 20th. The Friday before was certainly a bearish hammer, or a shooting star as it's called, with the close very much in the bottom of that candle. Then that's the preceding Friday. Then on Monday we would have been looking for a potential entry over here. So going to Monday the 20th, you would also notice that the initial setup in fact was given to us by the close of the final candle on the Friday, which is the 8 p.m. to midnight candle, which means that first thing Monday, probably an hour or two into Monday's trading session, let me just get that out of the way, you would have looked to have entered here, and that would have at worst been where this current entry level is shown with the blue line. It could easily have been higher if you'd entered a little bit later. Either way, your stop would have been above the preceding fractal, and that conformed to our ATR requirements. Just in any case, just to give you a rundown quickly, I know a couple of you asked about this in the trailing stop methodology. Because we're on the 4-hour time frame, we're using a 3-6 rule. 6 4-hour candles being total of 24 hours, and if we have 3 consecutive, in this case, bearish closes, then we would trail the stop to above the highest high of those 3 candles. Otherwise, we look at the last 6, and you'll notice that there wasn't anything with 3 consecutive bearish closes for a while. So we'd have been looking for the last 6, and would only have been able to trail the stop ultimately at around 8 p.m. on Monday to above the high of this candle. So remember the offset plus the spread, reducing risk by, I don't know, maybe about 15%. The next opportunity to move would have been at the close of the 8 a.m. candle on the Tuesday the 21st, and we would have brought it down a little bit more to above this high, plus the offset plus the spread. And now you're talking about almost a third of the risk gone. But then, of course, 1, 2, 3, 4, 5, 6. Here we had 3 bearish closes, but it was also looking at 6 candles. However, we'd have trailed the stop to above the highest high of these 3, plus the offset plus the spread, and pretty close to break even. Reduce risk substantially. I mean, original risk around 30 pips down to 3, so we got about 90% of the risk on this trade gone. And of course, we actually did get stopped out there. That's par for the course. We know that with this strategy, we get stopped out the majority of the time, certainly more than 50% of the time. But it's these small losers that leverage up the size or the significance of our winners, and therefore our reward to risk ratio. All right, so that wasn't the end of the story, though, of course, because we still, on the daily time frame throughout this entire week, in fact, right up until now, we are in a, well, certainly previously an unconfirmed phase 1 or impulse wave, but nevertheless an impulse wave. So remember, folks, impulse wave, phase 1 wave was all the same thing. And having been stopped out around here, we'd be looking for another entry. And remember, we only look to enter on the strategy in the first few candles of the day. So here's a bearish impulse candle, but it's the 4 p.m. to 8 p.m. candle. So no go likewise potentially here. And we ultimately did have another possibility again here, but also too late. Again. Remember, always looking on the 4-hour time frame, we can compare to the preceding 2 candles for an impulse candle. However, the only one that meant anything to us was, in fact, this one here. So again, if you're looking at these time frames here, we're looking at relatively late in the day once again. So no possibility to get in again, which means that unfortunately we missed the gap on this pair. But if you had just followed the rules, then given a couple of hours, the market opened at that level, give yourself a couple of hours, you might have got in anywhere around this level over here. Stop, well, above the preceding fractal. However, just got to double check that that's inside of our 1.5 to 1 reward to risk ratio requirement. So call that 38 pips. Our ATR is 44 on Aussie Swiss, call it 45. So the most that this can be is actually 30 pips. That's too far. And slightly more than that. So I hope you guys are getting the hang of this now. In any case, the stop would have been in that region, and our take profit, well, we've actually hit it again. I don't look at the equity on our trading accounts. It's a very useful trick, and you might want to use it for yourself. So literally in the last hour or so, this take profit has actually been hit. So a nice little win over there, certainly with a 1.5 to 1 reward to risk ratio, covering the 0.1% lost on that preceding loser. So 2 trades here, we're basically netting 1.4% profit. Okay, so Aussie Swiss again, Swiss franc being a theme here. Okay, so as far as the currency pairs are concerned, last week there wasn't a huge amount of additional activity. So I just want to jump to some of our commodities where there was plenty of action last week. Certainly looking from daily down to 4 hour. The weekly time frame, we actually still inside of this pretty broad channel with this very choppy market behavior, you know, oil fluctuating by over $10 a barrel in the relatively recent past. But on the daily time frame, we've seen this significant bearish theme, certainly last week, where the formation of our channel, obviously, if we're using the multi-time frame analysis, we're looking at the 4th last completed wave, which allowed the bottom of our channel to move up quite significantly to this point here as we had that isolated high. And this isolated high also being, as we sometimes call, ringed. It was confirmed as the end of that wave, and this therefore became our 2nd last completed wave, which allowed the channel marker and bar to move up to this point. We were still inside the channel there, but only just. However, confirmed phase 1, impulse wave. The following day closed deep outside of our channel, which allowed us on the 23rd to start looking to short this market on the 4-hour time frame. So you can see we've done it again, but I mean, just looking back at that time, we're looking for a bearish impulse candle from the preceding day. We definitely got it. So entry shortly after market open on the 23rd. In this case, we needed to use our 1.5 to 1 reward to risk ratio limitation. And let's just look how it panned out. This was the take profit without using any of our deeper target approaches. This is using a simple 1.5 to 1, look at a simple daily ATR target and a 1.5 to 1 initial reward to risk. So as soon as this trade actually triggered, once we had the close of this candle, we look at the last 3 lower closes, but we can't move the stop against us. However, at the close of the following 4-hour candle, we now have the stop just in the right place, but then we didn't have another bearish close, or another lower close, which means we still had to leave the stop in the same place. Bringing us back to the 6-hour requirement. So the first time we'd be able to move the stop trading stop, I beg your pardon, is after 6 closed candles, which would have been at the close of the 9 p.m. candle on the 23rd. Looking at the preceding 6, this was the highest point. Sorry, 1, 2, 3, 4, 5, 6. This was the highest point right there. We'd trail the stop to that, plus the offset, plus the spread. Nice tight spread on oil. So within a day, effectively, we were able to reduce the risk on this to about 25% of the original risk. Very, very important, but still gave the market an opportunity to breathe. However, 1, 2, 3, 4, 5, 6. It was at the close of this candle here, this bearish impulse candle, where we were able to trail the stop a little bit further to, in fact, either above the high of that close or that high, which means that at this point we were able to move our stop to break even. Risk-free trade, and obviously it was actually in the next 4 hours that our take profit was hit. That was a candle that started at 1 p.m., being a 4-hour candle, finishing at 5 p.m., which is too late for us to look to take another trade, of course, also on a Friday, which in hindsight, in this case, was a pity because today it would have certainly gone straight to profit. But that doesn't stop us from looking again. Now, please do ignore my open experimentals over here. I'm always playing around with my software. But you would also have identified the fact that, okay, certainly that wasn't an impulse candle, but today's first 4-hour candle was, and you would have again taken a short at this point over here. With, in this case, again, you would have looked at 66% of the daily ATR. So your stop would have been somewhere in this region, above the gap in any case, and you would be looking to follow that same rule set. Right, so that's oil. Don't want to get too bogged down with any of these, but hopefully those of you who are trading these strategies specifically can see that you're on the right track. We spoke about cocoa last week as well. Another one where we had an amazing run during the course of the preceding week, but as soon as that isolated high was formed, which was actually at the close of play on Thursday, we stopped looking to trade this inside of our impulse waves on the lower time frame. Bearing in mind we are outside of the channel, however, on both the higher time frame. So on weekly we are well out. So we can also look for a bullish impulse candle on daily to go long on this. Now that certainly has not happened over the course of the last several days, and certainly today's gap was bearish, so it's not looking like that's going to happen certainly today, but we can't second guess the market. Let's see what happens throughout the course of the week. Right, so just coming back to last week again, I'm pretty sure we spoke about the possibilities. So starting from Monday the 21st, and this is really important to look at, is how we manage the downside, even if a trade doesn't end up being a winner. In this case, on our trade, it just hit take profit. So it might or might not have. It was very borderline, but that happens. Sometimes it'll work for you and not for me, and other times vice versa. But in any case, throughout well, certainly on the 21st, last Monday, we'd had that very strong bullish candle on the preceding Friday. So there was, without a shadow of a doubt, a setup after that. We spoke about the preceding week in our last video, so you'll remember that we had a winning trade there. We then had our take profit hit, if I remember correctly, it was around this time. And so we were looking for an impulse candle following that. Again, it's a little bit further back. Might have spoken about this already, but on the 16th, impulse candle, that would have hit take profit as well. And once that had hit take profit, we had another entry on the close of the candle, assuming you're trading these time frames on the 17th. So that was that one. If you'd got that, you would have just managed to hit take profit with a daily ATR target. But if you'd waited, as in many ways I'd encourage you to do, waited for for Monday, so not take a trade late on a Friday, then you would only have looked to have traded on the 21st. So market entry somewhere around the open of this candle, you might have got a slightly better price, and that's what this entry is in fact representing here. Is it depending on how good your price was? If you'd managed to get this entry, as we did, then an ATR target was just hit. If you didn't, you might have just missed that. However, what's really important to note is that you would, even if it ended up not being a winning trade, you would have basically lost very, very little on it. Always a pity when you have a trade that goes nicely into profit and then ends up being stopped out, but that's the way it is. All right, so it's the name of the game, and we're not able to second guess the market. Importantly, however, is that since then, we've had nothing to trade. From the 23rd, the close of the 23rd, that high was isolated, which means we cannot look to trade an impulse wave on the lower time frame because we're in a corrective wave. All right, so on the higher time frame. So that's cocoa. And of course, last but not least, by any stretch of the imagination, are the global indices. And some nice trading activity again for us. We've known over the last several months, you can see how the Dow has been making consecutive higher weekly highs. And that's allowed us to do all sorts of things and make plenty of money out of these. But we're seeing right now that this is a time to step back from these markets. Clearly, if today were to close in any kind of region below, in fact, unless today was to make a higher high compared to Friday, there is no way we'd be looking at this market to trade it on an impulse wave on the lower time frame. So the looking further back before I get into what we're going to do this week, it is important, however, to note that we did finish off the week before with the possibility of being able to trade this on the lower time frame. So if I remember correctly, we were looking on the Monday the 20th to potentially enter a trade here should we be given a signal. So that's the 20th. Let's drop down to the 4-hour time frame. Just move this across. Not interested in anything before that. Right, so looking for a bullish impulse candle on this lower time frame, of course, at the right time of day, you'll notice that the candle on the last candle on the Friday was definitely not a bullish impulse candle, nor was that, nor was that, nor was that, nor was that. The first one was, in fact, on the 20th, starting at 5 p.m. and therefore closing at 9. There's no way we would ever look to enter a trade at that time of day, certainly in the latter part of the day on the US market. So, however, apart from that, it was the first signal to go long. Just as well we didn't, because it would have stopped out immediately. And that kind of also just shows, I hope, why using what we know about the life cycle, the daily life cycle, and even weekly life cycle of the markets is very important. That's important information to use. All right, so that being said, it was then at the close of that day on the 20th where we actually had a confirmed end to the preceding impulse wave and stepped back entirely from that market. This was also a ringed high, for those of you know what that means, which means it was a confirmed end of that impulse wave. So from the 21st, there's absolutely no way we would have looked to take any trades on that. All right, so that's that one. Even if you had taken that, been a loser, it was, well, I'd say best not to take those trades that are very late in the day. But had you done it, there's still times when those trades win as well. Okay, so for the rest of the time, of course, we've been in a, this has just been making lower lows on the daily time frame, so we're not interested. And of course, then on Friday, despite Thursday's bounce off of this support level with this hammer or low test, some of you might call it, looking really positive for a bullish resumption. Of course, the following day that didn't happen and it closed back inside of our channel. So that's also showing huge weakness even on Friday's close. However, today being the first day of the week is kind of confirming that. We're seeing significant drops in the market. Although, I mean, that's just the Dow Jones, but we're seeing a very similar picture being painted on the S&P as well. Even though the S&P on weekly doesn't yet have, certainly by the end of this week, if this picture were to unfold as it is at the moment, we'd have a confirmed end to this very long impulse candle showing some bearish activity. But things change on a dime, so let's not prejudge what's going to happen next. The other thing to note as well, I think we were talking about a trade that we were in last week on the daily time frame. We were able to trail that stop to break even, and it just managed to hit the take profit. It took its sweet time, but it hit the take profit on Wednesday, despite getting very close all the way through that week. I think we spoke about it on the Friday preceding that on the 17th. All right, so that did hit and has rolled over quite dramatically now. So we're certainly not interested in anything else there. Okay, so that's the week in review. Lots of volatility, lots of reversals, certainly exciting, lots of reason to step back from the market. And even just in terms of the rule sets that you guys have learned from us, you will know that most of these markets are now not for us to trade with our core strategies. All right, so we spoke about, for the week ahead, we spoke about the Euro USD. When I was looking at the stuff before, it was before we would potentially get into a trade. Again, you should have been in a trade here potentially already. Either way, just it's definitely a bearish move. The main thing is always is to make sure that you are in the right direction and you're aggressively managing downside and letting upside look after itself. Okay, so on the daily time frame, for those of you who are trading the continuation strategies, if you're using certainly the 21 candle HTC channel, then we would have had the breakout on Friday from the HTC channel, which would be at this level here. So you're not yet ready to trade. You're waiting, aren't you? So I'm sure you know that, but just to confirm that you are waiting for this bearish impulse candle to show that it's come to an end. And for that, we need an isolated low, regardless of whether it's an inside bar or not for that. All right, so that's Euro USD. Next one to touch base on is the Aussie, which we haven't actually used for a while. And certainly on weekly, you can see that it's just been extremely choppy. We had a false breakout way back in sort of September, no, July time, I beg your pardon, on this in 2019. But on the daily time frame, last week we did in fact get a breakout on the 21st on Tuesday. So having said that, it wasn't a breakout yet of our 13 candle channel. I've updated the analysis, but please do remember that at the time the 13 candle channel was here. So we were not initially looking to trade that, but as soon as this high was isolated, which was Friday's close, it meant that this was now our updated channel. And you guys should know enough about this now to know that this is how it works, which meant that Friday's close was outside the channel. And of course, we not only have got a breakout, but any preceding retracement or corrective or phase 2 wave was over with that high being ringed. Even if it wasn't ringed, this outside close meant that we needed to look to go short. Now, this was a market to short the first thing this morning. Don't worry about what you're seeing on this. We're just experimenting here. If you have a look on the 4-hour time frame where we would have actually looked to do it, this blue dotted line is in fact where you would have looked to have shorted the market. If you'd waited an hour or two, because I always recommend on a Monday morning that you do that, you might even have got a better price, just waiting for the spreads to come down and liquidity to come back into the market. But worst case scenario, you really should have been able to get in somewhere around there. So that being said, then you would have had to have used a proportion of ATR for the stop, and which would have been up there. Now, we've had subsequently 3 consecutive bearish candles. So for the meantime, let's just assume that our take profit's not hit. You would have moved your stop from there immediately to offset plus the high of this candle. So at the close of this preceding 4-hour candle, which finished at midday today, it's just on 2 hours ago, you would have trailed your stop to that point. However, having said that, well, actually, no, at that point it hadn't yet hit take profit, but you would have already been able to reduce your risk massively, certainly by almost 2/3, I would say. And then in the last short while, you can see that the take profit on that trade would have been hit. So that's the way you need to look at this, folks. You've got to remember that we're not second guessing the market. We simply look to trade momentum. Momentum as a rule allows us to reduce risk quite quickly and aggressively. whilst allowing upside to look after itself. That's what high quality price movement is all about. So apologies if it looks a little bit confusing with these separate trades stuck on here, but I've just been working with my software this morning again. All right, so that's the Aussie. Moving on to Euro GBP, another pair I just like to comment on, where again we had nothing doing last week, but or certainly at the beginning of last week. However, on Wednesday we had a bearish breakout of our channel, which meant that from the 23rd, being Thursday, we would have immediately been looking to short this market, assuming that you could actually get the right kind of setup. Now, from the start of the 23rd, we were looking for a bearish impulse candle. Remember, look at the preceding two candles. We didn't get anything until the 4 p.m. candle on the 23rd, which again is too late, unfortunately. All right, so it's certainly possible to have entered just after midnight based on the 8 p.m. to midnight candle. Look at the preceding. So you could have potentially entered to sell short here. So that would have actually worked. It would have been somewhere around the open of this candle, however, which is not very different from what you're looking at here right now. And then looked to manage your stop, of course, again. And as a result of that, it's likely that you would have in fact been stopped out in the early hours of this morning with our 3-6 rule. That's fine. It's not a problem. You can see I've actually taken another entry again over here. It's not looking fantastic right now, but then it very often doesn't. Who cares? So here is another potential setup for today. If looking at the daily time frame, if this doesn't continue to roll over, then it means that this low will be isolated and we will be out of our bearish impulse wave, which takes us into a corrective or phase 2 wave, allowing us to start thinking about a continuation entry. So for those of you who are doing the daily and continuation single time frame strategies, I've heard things like 180 and trend wave being mentioned, or short kickstart. This would be a potential setup for that, assuming that your 21 candle channel is the rules are met. So that's that one. Euro Swiss. This one is just rocking and rolling. Again, a pair that I've in the past very seldom looked to trade because of the inherent correlation between those two currencies, but that's broken down over the last several months. So I have absolutely no problem looking to trade it once the ATR picks up, but it has. I mean, to see an ATR of over 40 on this currency pair is unusual, and as long as our spread impact is okay, we don't mind. For the, again, trend continuation, guys, there was a setup here with, in fact, a couple of setups, but the one that triggered was the setup for the 22nd, so on the 23rd. So Thursday would have triggered you into this trade. Remember your rules for minimum reward to risk ratio. So you either use a proportion of your take profit. If you're taking the more conservative approach, you might not have actually got into this. So that would, you'd be well into that. And if you're using the aggressive trading stop, then you guys are definitely at break even already. I doubt that you've hit your take profit yet. It's a bit too soon for that. But the aggressive trading stop, trading behind the last close, will certainly mean that you're at break even, or would have been at break even late on Friday. And today it's just continuing. We've seen this significant Swiss franc strength against the euro. And again, the Swiss franc theme showing itself. We've looked at so many of these already, but you can see that it's still showing itself here on this particular one. Right, so that's that one. Looking at the 4-hour time frame, there were a couple of messy situations here in the early part of last week. If you were trading this on 4-hour, I think we had certainly we had at least one losing trade, which should have been represented by this entry, take profits, initial stop, but with the trailing stop in fact being hit at this point over here. So a small loss here, well under 0.5%, probably around the 0.3% mark. But that doesn't mean we stop looking. And in fact, at the close of play on the 23rd, start of the 24th on Friday, we'd have been looking to go again. So let's just have a look at that. Bring a vertical in here. Right, so this is the 4 to 8, 8. So we did not have an impulse candle until the 8 to 12 candle on the 24th. So that would have been our entry. And I'm assuming worst case scenario that you just entered at market there. If you'd used a limit order, you could easily have got a better price. So that is the setup candle. Our initial stop would have been above that preceding fractal. So the spread plus the offset. And then our take profit on this at the time, we were looking at about 40 pips. So might be at or around that level. Not quite. So 676. That's what it's spread. Right. So well on its way, as you can tell, this having kicked off on Friday morning. But then again, we're always looking to manage the downside. Very nice initial reward to risk ratio. I'm sure you'll agree with me. We've got a 13 pip to 39. So we've basically got 3 to 1 initial reward to risk ratio on this particular trade. But again, looking for 3 bearish closes, which we have not had yet. We might get it now. So looking at the last 6 after entry, we'd be looking to trail 1, 2, 3, 4, 5, 6. In fact, the close of the last 4-hour candle about 2 hours ago for the first time allowed us to trail the stop to the spread plus the offset on this one. So we're looking at just over 0.5% risk remaining on this particular trade. That won't change for some time because we need either 3 bearish closes including this one. So after this high, we're already using that high for our reference, for our stop. So we need to have another 3 bearish closes, which could easily take us to the take profit, or another 6 candles, giving it some room to breathe. But, that's all good. That's exactly how it works, and it works well. So there's the Euro Swiss for you. Continues to work amazingly. A bit of a convert over the last while, but always looking for the correlation to come back into it. But I think possibly, and again, with the narrative effect that our predictive brains always try to bring in, it might be the fact that the UK has voted several months ago to leave the EU, and that's showing us a bit of a breakdown between your more independent currencies, such as the pound, such as the Swiss franc, and the euro. All right, so that's the wrap, I think, for what we're looking at for this week. The one final thing I'd like to point out is our score sheet. As always, having gone through all of our currency pairs, a few changes on weekly. The one thing to note on weekly compared to the preceding week is that there's just a lot more weakness creeping in. So we had much higher scores a week ago on a weekly. And on daily, we've seen scores drop significantly as well. The interesting one is that the Swiss franc, although still pretty strong, isn't in fact showing itself, and this is obviously this analysis being done on the weekend now, as of close of play on Friday, is no longer the strongest pair. It's a close second to the US dollar, but let's wait and see how that could easily change very rapidly during the course of this week. The weak one, as we can see, is the euro. So it was the euro against the Swiss franc that we've just been looking at right now, and that kind of makes sense, as I'm sure you'd agree. And the alternative is the euro USD, which is what we started off with, and we agree that certainly there's some, well, we're into a trade or two there as well. So the score sheet helping us certainly from the daily, looking at 4-hour entries, euro USD, and the euro Swiss showing us or pointing us in the right direction on the daily as to how to trade on the 4-hour. All right, so folks, that's it from me. I hope this has been valuable to you. Again, if you have any questions for me, please don't hesitate to throw them into the comments below. And wherever you see this, there will be an opportunity to do that. If you're not already a member of our private trading community, then please just send us a message on Facebook. There's the send message option, and I'm sure you already noticed the information email address up here for you to contact us. Please do that. It's really simple and easy for you to get access to all of our trading activity that we follow through from week to week, and I certainly try and help you guys with learning how to trade the way we trade, which is first and foremost not using predictions, accepting that the market is effectively random, and understanding that that doesn't matter. We don't need to know what is going to happen next in order to be highly profitable. So that's the one side. On the other, we use price action, pure price action, which is basically a combination of support and resistance and cyclicity to analyze the market. It might look a little bit complicated when you're not used to it, but it certainly works very well. And again, if you want to learn more about that, just drop us a line. All right, so I hope you enjoyed that. I hope it's been of value to you, and look forward to chatting to you guys soon. Have an awesome week trading. God bless. Chat to you soon.